Technical analysis 2016 trading the euro Australian dollar. Technical analysis 2016 trading euro Australian dollar. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders, and our website is www.stochastic-magdi.com. The title of this video is Technical Analysis 2016 Trading Euro Australian Dollar Currency Pair. All right, so we are now on the daily chart, and I want to show you something very important. The reason why I need to show you this at the beginning of this video, so you may take very seriously this tutorial. All right, so this is you can see today, let me show you my calendar. Today is the 3rd of February 2016. The time in London is 18 minutes past 11. Exactly the time I'm starting to record this video today. All right. You can see that in January, I'm going to put a vertical line there in January 2000. Okay, so January somewhere here. We have this is the price action for January. Now we are in February, okay? So in January 2016, we see a chart pattern, okay? Remember, I want to say something very important, okay? A bullish chart pattern very often will be formed on or near a valid support level. Now, remember that a resistance also can convert, it can change into a support level. If the price breaks above that resistance level and find a support, that resistance level is now a support level. So when we are near a valid support level, all right, we will look for bullish chart pattern, all right, or bullish signal, or bullish trading setup, or high probability bullish, opportunities, all right. So we see an inverted head and shoulder near this orange line. Can you see the orange line on your chart? Here is this. Which line is this one? Okay, I can tell you now. You can note it down. This is 15149. Have a notebook if you trade the euro Australian dollar. It's a very beautiful currency pair. It moves very fast like the euro dollar currency pair, but it can be very tricky sometimes, okay? So if you are a new trader, it's better to trade the euro Australian dollar instead. The euro dollar, if you are a new trader, beginner Forex trader, it's better for you to trade the euro dollar instead of the euro Australian dollar, okay? So we see an inverted head and shoulder chart pattern, okay? So this is a trading setup. So we will now implement a valid top-down trading method. We are on the daily chart. We see daily chart, hourly chart, 10-minute time frame for the entry. This is one example of a top-down trading method, okay? So here we will use a top-down trading method, and here it is. It goes up very nice. Whether we are swing trading or day trading, this is exactly what we will do. But look, this bullish chart pattern did not take place anywhere in the void. It's taking place near 15149. Professional knew that. Which key level is this? Now, before we continue, before I tell you which key level it is that professional traders, hedge funds, big financial institutions have their footprints on the market. So you will see key levels at the footprint where they have sold it before. So smart money has sold this financial instrument near this red line, okay? So we want to know where they have made their decision. And they are likely to make decision when the price return to those key levels. So the orange line here, I can tell you now, is the median line of 2015. Can you believe it? Just knowing that, you will be getting very excited when you see this inverted head and shoulder chart pattern here. You'll expect you give priority to bullish signal above the median line of 2015. It's because the median line is the middle line of the range of 2015. So usually, generally speaking, theoretically speaking, professional will give priority to bullish signal above the median line and priority to bearish signal below the median line. It's psychological line. It's a psychological price level. The bull will become very, very happy if the price stays above the median line, and the bear will be very, very excited if the price stays below the median line. But this is not any ordinary median line. It's the median line of a yearly candlestick bar. So note it down, 15149. I have in total, how many price level? Okay, I have in total 5 key level I want to share with you. So as the price going up, look, the price did find a resistance here. Why professional quickly take profits here at this level 15917? Which key level is this? So you see now why we need to know those key levels so we can make decisions at the right place at the right time like a pro. This dark blue green line, it is okay, the opening price. Okay, let me adjust that line properly so you may see. Am I getting confused? 15917. 15917. That's not. I'll need to rectify that. It's not the exact level. 159. The exact number is 15938. Okay. All right. Let's adjust it. So that's the 15938. Which key level it is? Is the opening price of 2010. Can you believe it? On a yearly chart, the opening price of 2010. So price moved from the median of 2015 and stop at the opening price of 2015. It's not by mistake though. Look what has happened here. They sold it here, yes or no. This is their footprint. They sold it here before, and they know that people sold it here, and they will be willing to sell again here. Exactly, this is what has happened. We are on the daily chart. We can swing trade and day trade, just playing with the key level using a top-down trading method. We are looking first for value trading setup on or near a key level. Then we will implement a top-down trading method without violating the market pattern and or even committing one of the 7 biggest trading mistakes. So now the price coming down again near the median level 2015. So 2 key levels are given you so far. 15149. Note it down. Have a notebook. Okay, 15149 is the median of 2015. 15938 is the opening price of 2010. The red line that you see here, which key level is this? That we must know if you want to trade. The euro dollar, the euro Australian dollar, the euro Australian dollar throughout 2016. The red line is the high of 2015. That level is 16592. Now we have another line here, the pink line here. What is this pink line here? So I'm going to go quickly to the monthly chart because I need to share with you more key levels. So I'm going to give you quickly those key levels. The pink line, I will tell you more what it is. Just note it down. 15271. Just call it the neckline. The neckline of the round bottom chart pattern. The neckline. Just call it 14271, the neckline of the round bottom. There's another key level here, 13679. 13679. Okay, which key level is this? Is the low of 2015. 13679, the low of 2015. And then we have this key level here, 12685. Let me adjust it properly here. 12685. Okay, let's correct that. Okay, 12685, because if you are doing this, try to concentrate and do it properly. 12685. Which level is this? Is the opening price of 2013. So in total, we have, 6 key level. Okay, 6 key level. The pink line is the neckline of the round bottom. So we can see very often you see a price will go down and then go around. That's when we have a round bottom. I will be recording a video about the round bottom. So I usually use a conservative measurement. So if you are very, very strict, okay, understand that I use a conservative measurement because I don't want to be too greedy. So we will measure, my friend, the depth of the round bottom chart pattern, which is being formed here. Pay attention carefully. And then we will project it above the neckline. So you look at it. It's coming near the high of 2015. All right, yes or no? Look, in January, we are the monthly chart. In January 2016, the price ran very fast from the median line of 2015 all the way to the opening price of 2013. Is that correct? 159. Okay. I'm checking my note. 38. That's the opening price of 2010. I quickly found a resistance and come back down. Now it's slowing here. But remember that we have, a round bottom in place. All right, this is technical analysis. Technical analysis 2016, trading euro, Australian dollar. The neckline is 14271. The ultimate target is somewhere near the high of 2015. Remember that the price will not go up, though we have a technical trading setup here that swing traders are trading. So they bought it here near the neckline, they pull back, they bring it up, a price pull back again, some trader buy, but something's going on. The price is not going up forever, it's just coming down. Okay, this has happened, it's happening since 2014, 2015. So we will see this year whether it's going to break through, okay, and hit the target. In 2015, it hit the target here, traders sold it here. Will it go back again, or will it come back down? There's another key level I will share with you very, very fast, my friend, is the 50% Fibonacci retracement level of the depth. Am I speaking proper English to you? All right. All right. The depth of the round bottom, okay? I will highlight that level on my chart. That's here it is. I'm running out of color now. I will color in turquoise. That's the median line of the 50% Fibonacci retracement level of the depth. My conservative measurement, 50%, that's here it is, at 13236. So if the price fails to continue to go up, okay, and start coming down, you need to watch first the level of 14271, then the level of 13675, and then the next level 13236, which is the 50% Fibonacci retracement level of the depth of the round bottom chart pattern. It makes sense? It is also powerful. So at this point in time, we will say priority to bullish signal above the level of 14271, which is the neckline of the round bottom. Okay? Okay, price turn around. Now it's staying above this level. You need to be aware also, okay, we can, at this point in time, which tool can we use? We can use also the pitchfork tool. The pitchfork tool allows us to forecast the possible routes or possible path that the asset is likely to take. So after we see a round bottom and a pullback, we can pull out our pitchfork tool. As I place it here on my chart, you see here, this is I place it on the high of 2014 and also at the low of 2015. Okay, I don't know. I'm on the monthly charts. So I need to clarify that better for you. That's January, on top of the January 2014, all right? And this one here is April 2015, okay? So 3 points we need to draw our pitchfork tool. That's the first point, okay? Then we have, okay, the second point here, and then we have the third point here, all right? So with these 3 points, we can draw our pitchfork tool. So the pitchfork tool will determine the possible path that the price is likely to go. So far, the trend is not strong. The price is now residing, so to speak, in the second part of the pitchfork tool. Okay, if the trend becomes very strong, the price will change and go to the upper side of the pitchfork tool. Okay, so far the trend is not very strong. Another thing I showed traders before at Day Pro Trader YouTube channel is that when you draw a pitchfork tool, nothing can stop you to draw line on your chart. So we can divide half of the pitchfork tool into 2 channels. So you see here, I place a median line here. You can see how the price run fast and hit the median line. As I explained to traders, the intersection point between the pitchfork tool or the projection of the pitchfork tool and any horizontal support or resistance level is a hotspot trading zone. So you can see that we have intersection point between the projection of my pitchfork tool and this key level, which is the opening price for 2010. This is a hot spot trading zone. You see the price went into the hotspot trading zone, traders sold it down in January. Now we are here in February. All right, so divide the half of the pitchfork tool like this, and so you can know exactly what is taking place. Remember the key levels, and also draw your pitchfork tool. This is the first part of this series of video about technical analysis 2016 trading the euro Australian dollar, part 1. In February 15, around February 15 up to February 20, 2016, I will be recording the second part of this series of video when I will be talking about, okay, the equilibrium price level for the euro Australian dollar, all right? Around August and September 2016, I will record the last part of this series of video, and I will be telling you another, equilibrium price level that traders must know so they may trade the Euro-Australian dollar currency pair like a professional trader. To summarize this video, we need to note down and remember, 6 key levels. The first key level is 16592. The second key level, 13679. The third key level, 15149. The fourth key level, 12685. The fifth key level, 15938. And the sixth and the last key level that we must remember is 14271. I also mentioned another seventh key level, which is the 50% Fibonacci retracement level of the depth of this round bottom is at 13236. It makes sense? We will draw pitchfork tool selecting this point here, all right? So that's August 2012. We select, that's the first point. We'll also select the second point, which is, the month of, the high of the month of January 2014. And we will select the low right here of, the month of April 2015. With those 3 points, we will draw our pitchfork tool. I recommend to trader to divide half of the pitchfork tool, as you can see I've done it here, and the intersection point between any part of the pitchfork tool and the horizontal support and resistance level. These are hot spot trading zone that the professionals are watching. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about technical analysis 2016 trading the Euro-Australian dollar.